Okay, hello everyone, and welcome to another live Pepperstone event. It's a very interesting time in markets, and we're here today to discuss everything from stocks to commodities to, of course, cryptos and currencies. And boy, oh boy, some of them are moving, and of course, some are just constantly climbing up, such as the US stock market. Ty will talk about that one. I think moving forward, obviously, we've got the US stock market closed over the next 24 hours, but that means currencies and commodities should still be moving. So, how have you been? And are you excited for today's session? We've got Grace, Big Silver, and Ike coming in here early, and we've got many, many others. Thanks for giving it a thumbs up as well. How you been, Ty?
Yes. Good. Welcome, everyone. And yeah, now we're certainly starting to see some interesting times in the market. Yeah, US 500 is not going to stop until it gets to that 5,500 by the looks. It's only a handful of points away from it. And the NASDAQ is fast closing in on 20,000. So very interesting times in the market. So looking forward to getting into it tonight.
Psychological levels, Ty, are never to be underestimated when it comes to market conditions. So yeah, very important we talk about that. All right, guys. Well, we've got a quick disclaimer, and then we'll get into everything, including your questions. So make sure to ask your questions throughout the chat, and we'll answer them throughout the live session. See you in a sec. All right. Well, I think we start here with the US dollar, Ty, because on the surface is probably the least exciting currency at the moment, with an up, down, and all around type of process. We're really pinched, I think, between two levels, somewhere around the 104 zone, which we talked about the other day, and then this very important level that you discussed last week, which was 105.50. We continue to stop just before the 105.50, don't we? And we reject. So I find this a pretty happy equilibrium for the dollar at the moment, but I think a break of 105.50 is significant. Maybe you can go through what you think in terms of levels there, and I think also at the moment the trend is maybe even neutralized. What are your thoughts about trend at the moment?
Yeah, look, it looks like it's trading a little bit sideways at the moment, but I think if you look back and really, I mean, what we're seeing is an attempt at a push higher. If we do get above that 105.50 with a daily close, I think we're going to see probably a move back up to the 106.50 pretty quickly, actually. So. It's still higher lowering out of that sequence off the bottom. So I think it's a very, very important zone for it. Look, it must be broken. We talked about it last week. Nothing's going to happen until it does get broken there, in terms of the trend continuing. But at the moment, it's kind of at that place where it doesn't really know what it wants to do, but it's certainly trying. My mind is telling me that I think it wants to break it, to be honest. And I think the only thing stopping it from breaking it is the US 500 continually increasing every day.
Yeah, it certainly is very strong. So I think Ty is also breaking down the weeklies here. And this is why we always say on this show, and we always say when we do these live weekly, remember, links in the description if you want to sign up so you can see these every week, that it's so important to start from the top down. Two weekly big rejection candles. Obviously, this one here looks like a steal. Effectively, it's a bullish hammer, rejecting potentially the downward trend that was coming into it. And then we had another strong weekly close last week, but still closing underneath the 105.50 zone. And that's being slightly rejected here early. But if you look at it on a weekly, you'd be hard pressed to say this thing's negative. If you look at it on some of the other time frames, you'd say it's neutral. So on the shorter time frames. And of course, this becomes the conundrum. If we break 105.50, it's probably going to be a great momentum trade towards the upside, giving Euro traders, odd traders, and a lot of others some successful stuff. And if we break to the downside, specifically, I think a closure, Ty, underneath about 104.20 under these weeks, a closure here, and must be a closure on the weekly, could be incredibly significant, because whenever you're closing underneath these weeks, what are these telling us? They're telling us, and hopefully you can see these little drawings here I'm putting on the screen. So basically, these weeks are telling us that there's a buyer there and they've been very committed to this market. If the market actually breaks underneath that wick, well, that's telling you someone came in and they said, you know what, doesn't matter about your commitment. I've got more money and I'm going to push this thing down. And in many ways, it's that storyline that's so important to us as traders, investors, isn't it, Tyron?
Yeah, most definitely. And I think, look, a break above 105.50 is going to hurt the Euro USD more than any other currency, of course. Like, it's the one that's going to really feel the pain, because it's basically its correlation or inverse correlation to the dollar index is quite unique. So yeah, if we go to the daily on the Euro USD, we can see that again, yeah, the weakness is it's approached the base. There's no question it's at a base right now. The 107, very very strong support. You can see it's trading just above it at the moment, but it's been hovering. It's been hovering at the 107 and 107.20 basically for the best part of 2 days now. And realistically, a break of that zone, and I think it really opens itself up. Not even to the 106. I think it's probably about a 105.50 actually as the next very serious support for it. So that's why the move above 105.50 on the dollar index could spell basically $1.05 on or $1.05.50 on the Euro USD pretty quickly actually.
Yeah, I don't think there's much support here on the euro if we do go down. So I'm just zooming it out, and I can show you this level is a correct one. There's quite a lot of leftovers from many charts. I don't know why on this laptop, but basically, Ty, you can see here that the breakdown underneath 106.63, which I think would be equivalent of a 105.50 breakout from the USD. That would spell, I'm not even sure this thing would hold, which is around 106 flat. I could see that exact level that you're talking about, 105.60, 105.50 being the next port of call. That will be a very strong momentum style trade. And it would also be coming off what some people will argue is probably some kind of consolidation or flag-like pattern in the direction of that downward trend. So yeah, euro could be one to look at. Speaking of euro, speaking of just in general dollar currency pairs, gold, of course, getting a lot of focus. Not much change here from last week. I would argue it's exactly the same as we've been talking about. The 290 zone, this 80 to 90 zone, very strong in terms of you can see what's at stake. Everyone knows that's the demand or support zone. It's trying to mount bullish intentions, but to me, Ty, when we start to scroll down through the lower time frames, I don't think it's done enough to really can say, oh, yes, okay, we're really bullish this. If anything, it could also be consolidation to a breakout low. Now, if that's actually what happens and it consolidates in a breakout low and it closes, and the key is going to be here, it closes, then that's going to be so significant, I think, for gold. And that was going to push that 2160 style narrative. To get this bullish, I'm either looking for it to go underneath, quickly rebound with a nice wick, or break that level we discussed last week, which is about 2380. 2380, very strong gold buys.
Absolutely, and the 2280 is a very strong break. Now on the daily, we can see that we're getting squashed in between the 20 and the 50 moving average. So the pain of the consolidation is very very real. You can see the last 3 or 4 candles there have hovered inside it. The 20 moving average is bearing down on the 50 and pushing price down. So really, it's got a bit of work to do before it gets above that level. But if it does, look. Yeah, 2380 is the logical target. I think I don't mind either way. It's one of those ones where break short, break long. I'm not really fussed. I think it's going to go short, and mainly because when you're undecided, you have to go with what the main prevailing trend is saying, and the main prevailing trend is definitely a series of lower highs and lower lows on the daily. So whilst that is in play. When you're looking for, if you're a little bit lost on the direction and you're looking for a bias, it's always better to go in the prevailing trend's direction. And at this stage, the daily is definitely in a downward trend. There's lower highs and lower lows on the daily chart. It's as simple as that.
Yeah, this has been a pretty consistent kind of weakness here. And also, I think gold was one of the most heavily traded pairs of the year in terms of just sentiment became so overbought. I'm still very bullish on gold over the long term, but I can see why it needs to have these pullbacks. And just quickly, for the same reasons, copper had to have that pullback as well. Now, that's actually reversed over the last 24 hours. Look at this. This is a tweezer bottom, guys, breaking through that watch reaction zone just before. And this is actually a very interesting move. I know a lot of people don't trade copper, and rightfully so, but this is looking a lot more bullish now. So I'd be watching a lot of copper to see how gold trades off. Both had to have pullbacks. Well, of course, copper had a very significant pullback here. And that's the first sign of strength we've seen out of copper since it started dropping back in, when was it now? May. So interesting. Yeah, right here, as we're talking about this, fairly strong. I would say that's a pretty strong breakout from 4.5. And I think a close above 4.6 should solidify possibly basing here. What are your thoughts, Ty? I mean, is it enough yet, or what do you reckon? Closer?
It's getting bloody close. I want to see it above. I want to see it above the 20 moving average.
No,
Yeah,
of course it does. There it is. There it is. The
there it
20.
is.
That's the
Yeah,
one, by the way.
I want to see it
coming in
above
here.
that, and then I'll be
Yep.
convinced. We love
Yep.
a tweezer bottom. There's no question about that. But
Mhm.
above the 20 moving average for me.
Okay. All right, let's move over to one of the other pairs then. We'll start off with the US 500, the markets that have been pushing and pushing and pushing and pushing. Now, I've put in a few extras here today just so you guys can see it. So prep this chart up. So 5,500 is obviously a few things. Now, I say it's a major call resistance. There's not very often this happens, but in trading, basically once every month, you get what's called the OPEX, the monthly big options expiration. And this week, 5,500 is the most struck zone. So basically, it has been for a while. And it means that this level acts as a potential psychological resistance level, but also it has a lot of options sitting on it. So that can act, and you'll see this represented in the technical charts as actually a major level. And I think 5,500 is going to be tough for this market to break through. Like it might break through by 10, 20 points, but then it might reject. I'd be watching a lot as a day trader around how the market interacts with this zone. And as you mentioned before, Ty, if we have a look at the NASDAQ, which I've got up here as well, the NASDAQ's not only showing signs of exhaustion, but it's just about to hit, and it pretty much has almost hit that tippity top 20,000, a double digit. Now, not often we see one of these, 10,000, then 20,000. So again, these are points where traders do tend to have take profit targets, and they're probably on some pretty healthy profits when it comes to the NASDAQ, especially.
Yeah, it's a big deal. The 20,000 level, there's no question about that. And you might find that it may, push through a little bit, but I'd be keeping a very, very close eye on potential reversals from this level. And really, I look at I'm a big, big believer in the Russell 2000 as being our, almost our leading indicator to those big indicators. It is not reacting like the other two are. What we're seeing here is a series of lower highs and lower lows. There's absolutely no question about that. And it has been doing it for quite some time now. Remember, this is the broader index. This is a broader view of what the real economy is doing, not just a couple of tech stocks that are, going gangbusters. This is the real deal. This is the bread and butter. So, for me, if this was pushing new highs or at least recent highs, I would be a little bit more inclined to be comfortable with the story. But this puts me on high alert personally. I look at this and think to myself, this is not showing the same signs. The broader economy is not showing the same signs of strength as the S&P 500 and the NASDAQ are. So certainly something to keep an eye on.
So I actually prepped a couple of slides to really represent this, just for traders out there so they can understand what we mean. So, of course, a day trader is probably not going to care as much about this, but maybe a swing or a positional-based investor or something like that will care. So this is semiconductors versus the SPY. And you can put this into your TradingView platform with Pepperstone connected. And basically what will happen is you'll be able to see really the lead up. So when semiconductors are outperforming the SPY at the moment, we're in what we call a concentrated market. So this is a great chart that you can put on to see the strength that's there, but it's not broad. It's basically just a few stocks that are doing very, very well in what some people could call dot-com bubble style AI hype. And of course, if you look at stocks like AVGO, Nvidia right now, and you put them on a chart, it's going to look almost vertical. Now, another one that you can do as well, Tyrone was talking about the Russell 2000. One of the other good reads for this is to put in something like RSP into your platform. And what you'll notice is RSP is also, it's just sidewaysing. And what this is equal weighted S&P 500 fund. Now, it doesn't mean you want to trade this, but it shows you that there is a significant consolidation. While the market's making new highs, the equal weight of the market is not doing that. And that tells you that you've got a breadth problem. And the final one, which we've brought up here on the show a few times, has been load up your SPX, so this chart here, and then load up something like an advanced decline line. So you can put in an advanced decline line, and what that's going to do is it's going to show you whether the market is making new all-time highs with all the stocks coming along with it. And of course, in this case, that is not what we're seeing. In fact, since May, we actually have been seeing less and less and less stocks making new all-time highs, while some are doing it. So You could say that's the beginning of a new rally, or it's something very concerning. Regardless, when you're hitting these psychological numbers, you've got to be paying attention. So some good stuff there. Hopefully that's helpful for you, just so you can start to analyze the markets in a little bit more depth if you like to do that. Especially good for swing and position investors. Okay, so as you mentioned, Ty, you've already gone through the Russell. The last one is the Dow. Now, we don't usually talk about the Dow as much, but I thought it was an interesting one because the Dow's also showing a sign of weakness and continuing to weaken, or at least not be able to beat through this 39,000 that we've talked about. Now, what happens if this gets closed above? To me, it's kind of telling you the rest of the market is ready to go. And if that coincides with, let's just say, figuratively, we don't see weakness at 20,000 and 5,500, that could really spur on many hundreds of extra points on the SPY, couldn't it? Because it would be showing you even the big stocks are starting to, the other non-tech stocks are starting to come along.
Absolutely. Yeah. It's a time of patience and caution. I think it's probably, it could certainly go both ways. I think it's definitely time to be cautious, but you've really got to look at these indicators that we're talking about, these leading indicators, we like to call them, to really, when the worlds are aligning and a market is extraordinarily strong, all of the things that we've just talked about are actually pointing in the same direction. Okay, so I think it's really, really important to understand that, and at the very, very least, check out some of them to make sure that what you're seeing and what the market is doing are the same thing. Really, really important.
Yes. Yes. Got a comment coming in here from Grace, and she says Asian sessions have been seeing gold and silver selling for 3 days in a row. Anything but a follow through from the previous US session, and that's frustrating. Look, it's going to happen sometimes. I think the thing is that you sometimes fall in love with a particular metal or a stock or anything like that, and you just want it. You get used to it doing so well. To put things back in perspective, because I always like to do this as well, Ty. If you actually put things in perspective, gold is the second best major asset performer. Of course, we're not talking about AI stocks, but it's the second best major asset performer still of 24 so far, even at current prices. So I think we've got to put it back in perspective. For anyone that doesn't know why we ended up seeing gold sell off, the big story really wasn't to do with price action. It was actually that the Chinese central bank stopped purchasing for the first time in 18 months. I expect them to come back, but they stopped purchasing. And of course, that took the wind out of the sails of gold for now. So, because a lot of people were saying, well, if central banks are buying it, shouldn't I be considering it as well? Which is a fair statement. But yes, you're right. No follow through in the Asian session. And at the moment, it is trendless. But the price action also shows us that we're stuck in a sideways rut. And until you break out and you move from what we call an equilibrium level to the next one, these levels that we put on the charts, they're very important because they signify what we believe is trigger points, whether it's news that takes it through or whether it's just huge flow, hey, Ty. And that's the thing. Yeah. As a technical analyst or as someone that's analyzing markets, you've got to be able to figure out zones that you believe are so critical that if they do break through, they bring big moves or at least more predictable moves.
Absolutely. Yeah, because you want to be trading the obvious and the expected, not the unexpected. One thing you don't want to be doing is looking for unexpected moves. You want to be looking for markets that, one, are behaving themselves in a manner where you can actually replicate the trades. That's what technical analysis is all about, is history repeating itself. So if a market is behaving irrationally or erratically, it's going to make it very difficult to trade, right? Without actually getting, maybe slightly lucky. So I think you got to be really, really careful to differentiate a market that is actually swinging correctly and behaving itself and moving in an orderly manner, as opposed to an erratic market that can be very difficult to trade, very risky as well, because the volatility brings risk, of course, and the unpredictability, which is what we don't want as a trader. As a trader, if you said to me, what do you want from the market? I want a market that's behaving. I want a market that's flowing in an orderly fashion, and I want predictability. Those are very, very important hallmarks of all trading. And if you haven't got those, it makes it very, very difficult to actually isolate good positions. So, what we don't want is erratic, irrational, and unpredictable. They're probably the three. If we had the three opposite words of what we've got: patience, react, don't predict, it would be those.
That's interesting. Yeah, I guess the thing is with markets is you can also use the VIX as a bit of a guideline, but you got to think about the volatility of any one stock. For an example, GameStop might have a couple of predictable sessions, but a lot of it is just guesswork, and that becomes very problematic when you're trying to create a replicable flow in your portfolio. Meanwhile, you might be able to go through and we'll look at a stock that we discussed a few weeks ago, Tesla, and we'll show you what we mean by a breakout and the fact that you actually do end up getting a lot better flow and a lot better predictability there. We'll talk about that in a moment. So Bitcoin's actually the one that leads into the Tesla trade. And why is that? Because Bitcoin had some major trading going on around the 70,000 level. It's failed continuously to get through 72.5 tie, which we've discussed. And it's come down, and you'll notice I put a couple of levels here. Now, by using the higher time frames, we can get a bit of an idea of where we're at. So we're starting to pull down into 61.8 fibs of previous pulls. So we can do these types of things. So you can pull from a low to a high swing. You'll see we've hit the golden pocket. Now, that's cool in itself, and that's certainly key. But notice the price action here. And I've got this watch reaction here level. And the reason I've got that level there, Ty, is because to me, this is the point where Bitcoin has to put up. What I mean by that is it needs to find a bull here. I've seen some comments going around. And some of those comments have been insane to me. If you've not traded crypto, this is the worst crash we've ever seen in crypto. Well, certainly not. And what that's telling me is there's a lot of people that are new into the cryptoverse again, and they don't understand how volatile these pairs can be, because this is certainly not even extreme volatility for Bitcoin. And what I think this is doing is I think it's flushing out a lot of people. A lot of people were loving it here, and of course at these levels several times. This is where I think the price action gets really interesting, because it's pretty negative on the daily and weekly. However, when you start to scroll down to the smaller timeframes, what you can see is that it is respecting a very nice movement down. Excuse me, guys. 1 sec. I'll just quickly pause that. I don't know why it's going off. 1 second. Ty, can you just talk about those lower highs and lower lows?
Yeah, absolutely. Look, so we can see here we've got obviously lower high, lower lows, all coinciding with a 20 moving average. Everyone knows how much I love a 20 moving average, and every single time frame is one that is going to give you that sequence. But when we're seeing this, when Tom says we're looking for a bull at around that sort of 65,000, 64,500, that whole, it's a zone really. It's more of a zone than it is an actual level. The reason why we need a bull here is because that's the only thing that's going to arrest this definitely degrading trend. There's no question we're going down here. There's no question we've got a series of lower highs and lower lows. There's no worries about that. If this level doesn't hold, the level that Tom's talking about, the opportunity for it to get back to 61,000 it becomes very, very high. And if we get a break below that with a daily candle, look out. So, realistically, we've already talked about the consequences of what could potentially happen if we get a break below 60,000. So what we're seeing here is lower high, lower low sequences on a 2 hour, which is really giving us a short-term trend. And on a weakening, like if you look at it on a daily, it's similar to gold in the sense that there's lower highs and lower lows. There's no matter how you look at it, on the daily, the prevailing trend is definitely down from a technical standpoint. So it's a do or die level for it, and we say that a little bit, with some of these key zones. But I think aside from the 60,000, Tom, probably the 64,500, 65,000 zone is probably the most important in recent time, because if it gets broken, it really opens itself to a pretty reasonable fall.
I think this is a very important level. It's kind of where I thought this market would start to top out. So I know you talked about the lower lows and lower highs, but look at the respect of those swings as well. Every time, bang, hits it just here. Every time these things are going up and they're getting close as they can to those breakout levels, they are getting smashed back down. And that means to me, because that's happened now once, twice, 3 times, 4 times on all these little lower highs, that effectively we start taking through these levels such as 67.5 tie, I feel like that's a huge flow difference. That is a huge deal. And for the first time in a while, I'm actually enjoying Bitcoin analysis a little bit more. Not that actually is a downward trend line, guys, but I'm actually enjoying the Bitcoin analysis a little bit more, because I think this is such a pivotal point for crypto. And so many alts are getting hit. They're all going through their lows. Everyone's kind of getting taken out. And while you might say that's terrible, at the same time, it shows you the type of fear that's coming into this market.
Yeah.
And that can be opportunity if you don't have emotions and you have patience to react to the market telling you, hey, we actually are now moving on the way up. What a great chart to be studying over the next week.
Oh, I think so. Yeah, I think it's been very, very technical. Look, we've been trading since the advent of Bitcoin. So we saw it come into the market. I think Tom was the one who paid for it with pizzas. But
I certainly made them. Yeah.
It's been a long, long journey. But now I think it's really starting to make sense from, I think it's so heavily traded now, Tom, that, you can actually look at it and say, all right, the TA does stand up. And that's for a little while. And I think now it's at one of those pivotal points. There's no question.
Yes. Well, I think it's that time, Ty, that we go through our favorite trades. Just before we go through the one that I've got this week mapped out, I thought I'd kind of mention Tesla, which was one that we discussed a few times on the show here, the coiling monster, Ty. Let's have a look at the weekly. Again, pays to look at the higher time frames here, guys. 1, 2, 3 weekly dojis. Now, a doji, basically a high, a low, and open and close at the same level. That means the market's at a fairly happy place between buyers and sellers. No one's really winning. Then what happens is we get this kind of weakness that came through and it tapped right into our 170 zone and found a buyer straight away, which was then engulfed backwards. Now, to me, this 177 level was a very strong sign that a buyer had committed to Tesla. And then, of course, the next day it went ballistic, came back down, got a gap fill, then went ballistic again. Multiple opportunities. And the reason why I was just saying this is because regardless of what happens now, some large-ish moves have come off this already, 5, 6, 7%. And this area here has been both times the catalyst. And I was looking at some large traders. As it turns out, there was a fairly large one that came in the exact same price just before price. So what that's telling you is that large positions are worthwhile seeing, and you will see them with using technical analysis. So fantastic level, right on that equilibrium, and then it went down and then it reversed it. So that's the trap. That's why we say patience, react, don't predict. In this case, I think it's a pretty good trading. And I'm actually looking at Tesla possibly going to hit $200, Ty. Obviously no weekly close to the upside yet, and I know you're going to say you want that 20 moving average to be closed above. But again, if it does do that, and it's only a few more trade sessions away, I don't see 200 not being a thing for Tesla, and maybe that'll get some people excited. But 200's a big wall.
Yeah, I think that I reckon there's a bit of a zone actually around that sort of one. It's a sort of that 198 to about 205. I reckon there's a big wall in there that is going to be a problem for it. But I could see it. I could definitely see it getting there though if it gets the weekly break, especially if we get that close above it. It can move so fast too. Like that's the thing with Tesla, isn't it? Like it can move very, very quickly. And I know we're only talking about $15, I guess. From where we currently are now. But in the context of how it's moving, it's been sideways for quite some time now. It's been in a $15 range for quite a few weeks now. So it's probably due for a break.
Yeah, to me, I think these are all the early signs of breakout towards that side. Certainly interesting. All right, well, we'll go over to, I guess, my trade of the week now, and then we'll have a look at your one, Ty. And, we've got oil as well we need to talk about because that did pretty much what I would expect it to do. And this is going to be HSI again. So the Chinese stock market, or at least the Hang Seng in this case, starting to show some signs of life after pulling back. And this is the first strong sign from the Hang Seng that we've had in recent weeks. And a nice little one here coming off Tyron's favorite weekly 20 moving average. You can see that red line here, guys. So he's going to like this one. And what I'm enjoying about it is it comes down, it does a daily doji, it hits into a level I already had marked. I had a 61.8, this level and this level here all marked. And it's just found this strength to go through 18,200. And when you go down smaller timeframes, you'll kind of see what I'm talking about here. Some people will think of this as kind of like an inverse head and shoulders, left shoulder, head, right shoulder. I don't really think of it as a pattern. What I think of it is just it was consolidating and it looks like it started to break to the upside. Now, very early days, it's not through the 18.6 zone yet. But what I like to do is I always want to price that in with something that seems to be a leader. And Tencent is arguably a pretty decent leader in the Chinese market. And this is kind of, I wouldn't say it's the Nvidia of China, but it certainly is a very strong stock. It has some AI properties, and you'll notice here it's coming out of a strong accumulation. It looks like it wants to break as well. So to me, the Hang Seng market looks more interesting than it has in weeks. And Ty, it went from everyone hates it to everyone loves it.
Yeah.
Price, it's an absolute psychology dream. Price came down, everyone hates it again, and then out of nowhere, the last couple of days, it started to find a little bit of life. So it's everything in price action. I get excited. I love this stuff because it's everything that you would expect to see in price action, and everything you would expect to see in human psychology as well.
Yeah, no, 100%. I think it is a good one. Well, look, let's lead straight into my trade, which is the US dollar yen. We're going to stick with the Asian thing. And the US dollar yen is starting to get it's at a very, very exciting level now. People, let me tell you, it's trying to push that 157.80 to 158 zone. A daily close above this level, and it is very, very close to doing it. I think is going to see this bit of a break. If we go to a daily chart for a moment, we're going to see basically a few attempts at trying to break this zone. One attempt did break through, but of course it pulls right back. You can see we had that big breakout of about, I think it got to 160 something, about 160, nearly 160.20, and then it pulled back. But it has not given up the fight, and it is really putting a lot of pressure now. The moving average is getting dangerously close to this level, and prices being trapped in between the 20 and that resistance line at 157.80 to 158. So I think that if we do get the break, I mean, you could call it an ascending triangle if you like. It's very close to one. So
through the bottom,
and it is
draw that for everyone.
Yeah, so we can draw that, and people can see how what an ascending triangle looks like. I think this, coupled with the fact that the dollar index to me looks very strong as well. The US dollar does look strong. I think that we've got to wait for the break. There's no question about that. But the 20 moving average is very, very close to being support right at the zone now. So it's been a while, and it's catching up. It's fought the good fight. I think the bulls have got well and truly total control of this one at the moment. And I'm just waiting for that break. If we get a daily break about above the 158, I think the recent high of 160 is going to be potentially tested quite quickly, because there's not a lot of resistance in front of it, really.
So we want daily. Do we need daily close, or do we just need a daily breakout above this 158.30? Do you think, Ty?
No, we want a daily close. No, none of this is breakout business. We need a close.
Okay. So break and close.
And the reason for that is a break and close. Yeah, correct. A break and close, so we don't get the same potential effect that we've seen a few times over even the last few days. We've actually seen it break the 158 and then come back down and close below it. So we definitely want that daily close above the 158, and that will give us a good opportunity, hopefully, to get back to that 160.
All right, well, we've got Big Silver Hot Dog. Oh, actually, Ike saying, has Nvidia pushed a new high, coming in from questions, Ty? So let's have a look here at the Nvidia. And also, just with this yen, of course, you might want to read on the Bank of Japan statement last week. Obviously, they're kind of allowing also possibly Ty's trade to continue up. So we'll see how that ends up playing out. But do keep on top of those reports, because that is the only real caveat on top, is that they do come out with those reports. The question has Nvidia hit a new high, or has Nvidia hit the high, I guess? Now, it's a great question because you often look at a stock like Nvidia and you say, wow, look at these moves. Now, there are a few things that I tend to do, and Ty does as well, is we look at sometimes where the markets have done kind of similar moves. So you can see here consolidation, or first move, consolidation, breakout, and then recently we've got breakout. So you could argue that around 140 might be where you would expect the market to start finding some problems, but it is guesswork. And I wouldn't try to top the market of probably the hottest stock, now the largest stock, I believe, over the last 24 hours in the world, Ty. This is not something you fight, but has it detached from at least current price action reality? Well, yes, because look how far away it is from the 20 moving average weekly. And this is what they call mean reversion. And I'll just measure this out so you guys can see. It is currently trading at 41.98% premium to the weekly 20 moving average. And although that, I'm not sure if that's the highest high, No, it's not. It's pretty normal. But again, if you look at it, you measure this, and this is why it's great to go up those high time frames. It's getting up there with kind of those last exhaustion peaks. So I would say, yes, the trend's still up, but ultra caution here. 20,000 NASDAQ, Nvidia 40% above the 20. What are your thoughts here, Ty?
Mike, without the M equals Ike. I love it. And that was the question for Nvidia. Ike had the question for Nvidia, is it pushing to a new high? I would never want to jump in front of a moving train. And that's what effectively Nvidia is at the moment. But I think that what Tom said is very, very valid in the sense that it is extraordinarily separated from what we know is, basically fair value or is considered fair value, the 20 moving average at the time. So I'd be very, very, cautious. That said, if we can we just go to a 15-minute or a 1 hour chart on Nvidia again?
Yeah, of course. 15.
What I always suggest is what I always talk about. This is why I love the 20 moving average so much, right? You look at it and say it's at all-time highs. What the hell do we do with it? How do we trade it? Well, you trade in the direction of the prevailing trend, but you go to the smaller time frames and scalp the hell out of it, right? So you can see here, even though the moves look exaggerated, how many entry points have we got here on a 15-minute pullback? Tom, what do you reckon? How many do you see? About 5, 6? And that's only in the last session. So
2, 3, 4. This one here would have been, just so you guys know, that looks good. Remember, your stop should always be below the low. So in this case, again, you would save on each one.
Yep, absolutely. So you've had 5 or 6 attempts there, not attempts, actually successes, trading in the direction of one of the hottest stocks in the world, that is probably the strongest trend currently in the big players, and you've still been able to trade in one session 5 or 6 times in that direction. Now, the point of the story is exactly what Tom said. The stop losses are extraordinarily important on a stock like this. Now, what people tend to do sometimes, and it's very, very wrong, I mentioned it in my stream this morning actually, is that they use momentum or the strength of a stock and the momentum as the theoretical stop because it's so strong that all I've got to do is trade in the direction. I'd have to put a stop loss in because the momentum is so strong that I can't really screw it up. The problem with that is, of course, when it does eventually reverse, it can reverse really, really nastily. And if you haven't got a stop loss fixed at the right levels, you could be really hurt by it. So what you always want to do, even if you are in a very, very hot stock that's moving very, very fast, always apply the really correct risk management for that trade. So if you're trading those high, low sequences on a 15-minute chart and pull back to the 20 moving average, just put the stop loss below the last swing. It's as easy as that, really. And you're going to be protected by any heavy volatility from what we know is a very important level or approaching a very important level every single time it makes a new high. So don't neglect stop losses, even though something looks really, really hot. I just pointed out how many opportunities you had to trade it in a particular session, let alone over the last few weeks. So just keep in mind, though, that risk management still has to play an important role, no matter how strong it looks.
There you guys. All right. Don't worry. We're back. Yes. So what were we at, Ty? You were obviously talking about the Nvidia. So Nvidia. I've got that back up.
Yep.
Oh, yep.
Lovely.
All right. Do we skip to the next question? I think you probably finished that one.
Yeah.
And that is Big Silver saying, I rarely trade BTC, but I've made a speculative entry at this level. Did you answer that one, Ty?
I don't think. I think that was more of a statement than it was a.
It is, yeah, but I'll read it out so people can read it in the background. So I really a speculative entry at this level with reward primed if we do get activation. So obviously, the idea is that he's loving charting Bitcoin.
Yeah, and I think it's not a bad thing, Tom. I mean, that entry is not a bad level because look, at the end of the day, if it's going to bounce, this is the level it's going to bounce from. Big Silver Hot Dog. So I think it's certainly not a bad place to be entering. In fact, it's probably the level where you're going to find support. So if it's going to go, here's the place it's going to go from. It's my thoughts.
Yeah. All right, we'll end with a bit of a cracker here, Ty, which is a very good one. And that is a good story, which has been oil. And I actually think this is pretty much played. We talked about this last week in here We talked about this being at the most traded zone. So if you go back and watch our previous video, you'll see that. Now, this most traded zone, it consolidated here and broke to the high. Now, as it did that in the session, again, it's a good story of using your 20s like you like, Ty, and also using breakouts. The breakout here, this closure on the 2 hour to me is activation of accumulation is now complete. We're moving towards the upside, and boy, oh boy, has it done so. So oil could be on its way now, I think, to around 83.50 a barrel to 84 a barrel. And it's had a very strong move. And you might say, well, it has to have a pullback. But even if it does have pullbacks, I think those pullbacks will be met by bull demand at this stage. This is a significant breakout past 80.50. It's come off a very nice level. It's consolidated where you expect sellers to be in. And I think those sellers are getting squeezed at this stage. So it's all represented on the chart. And oil pretty much did what you would think. Obviously, a large move either way. In this case, it's the upside.
Absolutely. Love it. Love the oil, and it's done everything we wanted it to do. Bless its heart.
All right, guys. Well, look, thank you so much. Oh, we've got one more here, or two more questions. Would quad witching affect the metal markets? It'll affect all markets ultimately in terms of whenever you're looking at a witching event. What witching basically means happen at the same event. So you've got index futures, single stocks, and also just in general, other futures going as well. So effectively, that means there's trillions of dollars at stake. Does it move any market? Anything that moves the major stock market like the US 500 will ultimately ripple through currencies, commodities, and even cryptos. So yes, it will generally visit that. And then we've got one here from Calvin saying, can we please check out the Swiss yen? Sure, we'll do that to finish off. So thank you very much for attending today, guys. Let's have a quick look at the Swiss yen on the Pepperstone platform in TradingView. And we'll check this out. And it is an almighty bull run. I can already tell you on a weekly and a daily, that thing is absolutely flying. And you know what? See, this is why you don't fight the trend, guys, because that is when I go out into the weekly, I get a good idea. And really, this is kind of like what Ty's been saying. Yeah, we've got strong US dollar, but really it's weak yen. That's a huge component here. So is this extended? Maybe. But what I'm going to guess, and Ty's going to guess as well, is there's probably a sweet time frame, maybe a 4 hour, 20 moving average or something, that this thing's been fairly well bouncing off. I'd say it's probably around a 4 hour. That looks fairly good to my eye.
It's pretty good to me.
Yeah. Holding the lower lows. So I think that at the moment, I would say this thing is following the 20 moving average on the 4 hour, 20 moving average. And what you could do is you can kind of mark that out. And then if it does come down, have a look on the really small time frames, the 1 minute, the 3 minute, the 15 minute, the 5 minute, and maybe you'll see a turn at that point, and that will then give you activation, because you don't just want to use one indicator, but certainly very strong trend. Where does it stop? I don't know, because I think it's in uncharted territory. So you just keep following that trend using good quality risk rewards as it comes back down. That's what I would probably say there, Ty.
Absolutely. All right, everyone. Thank you so much for joining us tonight. It's been our pleasure bringing you the analysis for this week. Looking forward to seeing what the market gives us for the rest of the week. Remember, it is a US holiday, so there will be no US market tonight. So it may be a little bit quieter tomorrow. You might wake up and see the markets haven't moved all that much. That's generally the case when you have a holiday. So just be mindful of that if you are trading throughout the night and early into the Asian session. But thanks again, and we look forward to seeing you all again next Wednesday at the same time.
Thanks, guys. Sign up in the description down below. Give it a thumbs up if you enjoyed these videos, and make sure you let Pepperstone know you enjoy it. We'll see you next week. Bye for now.